and welcome to the IR Digital Podcast. We're recording this just into the new year of 2019, and what better way to start the year than to reflect on the past and look forward towards the future of fintech, the technology that's driving the next generation of financial services, and whether we know it or not, a lot of our lives. A colleague of mine already interviewed Douglas Park on blockchain technology, so check out our SoundCloud for that episode entitled Blockchain, The Revolution Starts Here, for a great primer on the tech driving to cryptocurrency. I'm the host of the IR Digital Podcast, Jennifer Riggins, and today we will be joined with John Friedemann, managing partner of Friedemann Goldberg LLP, based right in the center of the tech world in California. Today, we're going to offer you an overview of many of the different important topics to look forward to in fintech in this year, including what fintech even is, how traditional banks are staying competitive while still addressing risk areas, fraud protection, new regulations, and of course, we'll touch a bit on that hot topic of cryptocurrency and blockchain. This episode should help you if you're wanting to learn more about fintech, or if you're already working as part of its future in the financial services industry, or if maybe, like a lot of John's clients, you are in a traditional banking sector or financial sector that you need to leverage fintech and understand it better. So we hope you'll enjoy this show. John, to start off, tell us about the services you provide in banking and financial services sector.
Sure, thank you. I think it's easiest to think of the services we provide to financial institutions as relates to the relationships that they have. And those relationships are in four categories. Banks have relationships with their customers. Banks have relationships with their service providers. Banks have relationships with the government. And banks have relationships with other banks. Now, what we do is we provide assistance to our bank clients in terms of contracts with each of those categories and in terms of dispute resolution in each of those categories. That's probably a good synopsis of what we do in the financial institutions world.
Okay, banks and their customers, banks and their service providers, banks and the government, and banks with, of course, other banks, definitely. So the term fintech literally means financial technology, but not a lot of people really know what that means. It's a pretty broad area. What exactly is or is not fintech?
Fintech is focused mostly on the concepts of new technology and the ways that that technology improves and automates the delivery and use of financial services. So fintech in sort of an everyday sense tends to focus on consumer and B2B services. Virtually any service that might have been available in the lobby of a bank can now be obtained via the internet. So financial technology is the basic concept of fintech, and it's this way that services are becoming more automated. And I came upon an interesting point. It turns out that 1 out of 3 consumers use at least 2 fintech services every day. And those services might be money transfers, might be mobile check deposits, it could be funding a startup or a cause on some sort of crowdfunding app, but consumers are embracing fintech very quickly.
Oh, for sure, because we live on our phones. I like what you said about it's not just using technology in financial services, it's using technology to improve financial services. And I think that's a really nice way of discussing technology in general, that it's there to improve our lives. So we need to look at fintech as something, not a threat, but something we should welcome.
Well, it's interesting that you talk about the possible threat that fintech may represent to some people. When I'm talking to traditional bankers, I think it helps to point out to them that fintech, in a sense, started 150 years ago, when money was first sent by telegraph. That was a form of fintech. And it was only 100 years ago that the Federal Reserve Bank started using transfers of money between member banks through telegraph. And telegraph was still being used 50 years ago by the Federal Reserve Bank. So this idea about fintech, it has origins that go further back than people realize. That was technology being used in the financial sector. There has been very slow change over that time until now. Now we have a fintech revolution that's starting.
That's interesting. You think we're just at the beginning. That's exciting.
I
And
think so too. I think it's very exciting. I think the kinds of innovations we're going to see are going to be exciting. Banks use wire transfers to move money around, and that's still the case. But even that traditional movement of money by wire transfers is changing. There are these technology platforms at banks. They call them different things. Some banks might call them their cash management platform or treasury services, but those are how they deliver services to business customers, usually more sophisticated business customers, but that's changing. Now, virtually any customer is going to be allowed access to that treasury services platform, and that's going to allow banks to do things like initiate wire transfers themselves. So, for those that aren't bankers and aren't familiar, traditionally you would have to ask the bank to start a wire transfer for you. You would ask them by telephone or by fax or even going in physically into a bank. Now, with these platforms, a business says, hey, I'm going to send a wire. The bank is the pass-through device, but the customer originates the wire and sends it to its destination in these pass-through wires. So that's one application of change through fintech to an existing world of banking.
certainly traditional banks are quite famously slow to innovate. What other ways outside of wire transfers are these fuddy-duddy banks starting to innovate through technology?
Um, I will say that starting with the cash management platform that I was talking about,
Mm-hmm.
they have been for a long time made access to credit card payments easy. ACH transfers, that's automated clearinghouse transfers, have been made easy through the use of their cash management platforms. Those are less expensive ways to transact money. I think it is well known in the US by everyone that you can get direct deposit of payments that are due to you. Your paycheck can be directly deposited. Government benefits have to be directly deposited typically. So common ACH transactions are normal and ordinary already. Businesses can do things where they pre-authorize payments through their platform of connectivity with the bank. That way the bank knows that a payment is coming through and that payment is authorized and legitimate before it actually hits the bank. Accounts can be linked now easily. Virtually any service that might have been available in the lobby of a bank is now available with the cash management platform. Even the processing of checks has been innovated, so checks now get digitized and only the digital images are passed along. The author of the check, the maker of the check, doesn't receive the original item back anymore because it got digitized when it first arrived at a bank for deposit. So consumers also are in on it. They can check their deposits remotely. They can use an app to take a photograph of a check and deposit the photograph of their check via their smartphone. So there are innovations with technology already going on in banking that have become commonplace in many ways.
It is crazy. I do remember when I was a kid and suddenly ATMs popped up everywhere. And my mom had to explain to me because she said, we don't have money for that. And she had to explain to me that that was connected to the bank because I, being 6 or 7 years old, thought, oh, that's just the money machine, which would be a magical land that we all wish they would build that technology that just gave out money. But it is true that dramatically in the last 20, 30, 35 maybe years, there has been a dramatic difference in how we do banking. And it's taking, the bank is still the middleman for much of our stuff, but the user experience has the bank disappearing. So they need to add this value in frictionless service. So that's great. How do you think AI or artificial intelligence will help that process or impact banking?
I like that question. So let's talk about the negative side of AI first. Social engineering is a term that's used for a lot of different kinds of malicious activity by hackers. They use psychological manipulation to get people to part with confidential information. They'll impersonate a company or impersonate somebody and trick somebody into giving away access information. But now AI is using social factors, which is kind of the counterpart to social engineering, to enhance security of banking records and banking accounts. Here's a simple example. a bank might restrict access to an account via the internet to a particular IP address.
Mm-hmm.
So if you're not at that IP address, you're not going to be able to connect with the bank because that's presumed to be a hacker that's impersonating you. So there's a simple technology fix that's made possible through developments. I think that AI is going to be developed in the very near future to provide better protection for fraud. When I have a bank call me up and say, well, we've had a fraud loss, and they start to tell the story, oftentimes I could finish the story for them because we've seen it before. We've seen all of the elements of that fraud, and AI can do that same thing to prevent the fraud. AI can say, hey, when this happens and this happens, we now know that what's going to happen is a fraudulent transaction. So I think that there will be AI developed and in the development right now that will better enable banks to protect against those bad actors that are using social engineering to become much more effective at fraud.
I do, living abroad, my US card gets blocked a lot, but less and less in the 10 years I've lived abroad because now it's starting to understand my activity. But like when I lived in Barcelona, it would get blocked all the time still, even though the bank knew I lived in Barcelona. But they were still manually notifying the bank by writing a note in my account. And then Barcelona has a high risk of pickpockets and apple picking, as they call it, stealing phones. So they would still get banned. But it's lovely that they will understand my user behavior that much more now. And hopefully I won't have to call the US on off hours and wait on hold to try to get my card unlocked.
Yeah,
So,
you're not alone. You're not alone. I've had the exact same experience when traveling abroad that even though I took every precaution and let the bank know where I was going to be, I still was denied access for no apparent reason.
I guess it's better than the opposite of then someone steals our card and we have to deal with a loss of money. But yeah. Do you think there's a broad trend you can identify in traditional banks in respect to fintech? How they're growing with it?
Yes, I think there are several technology-driven changes, and I'd put them in this broad category. I think that the changes are being made to make transactions easier for those that consume banking services, and also to make the provision of those services by the banks less labor intensive. If the bank can automate things, those services become more efficient and cheaper for the bank to deliver. So I think that banks are embracing the internet in that fashion. They see that as being immediately beneficial. Banks are offering virtual or internet branches now. I think that the most popular aspects of fintech are those that are catering to consumers directly, whether it's a business consumer or a traditional consumer individual. That's probably the broad trend. And there's a rise of services that are provided via mobile device. I think that the most important factor, and I would love to cite authority for this, but I don't have any. I think the most important factor in people choosing who they're going to bank with is mobile accessibility. Will I be able to use my phone to access all of the services I want from you? Because if the answer is no, you haven't developed that yet, I'm going down the street to another bank. I don't want to bank with you.
Yeah, before it used to be basically a glorified bookmark and you'd have to log in and go through the whole process. But now at least I can log in through my thumb and I don't have to remember my banking passwords and the maiden name of my mother's best friend and things.
That's right. And I think in the very near future, anything that you might want to do, you're going to do with your smartphone. Your device is going to give you any financial access that you want completely.
Yeah,
Everything.
there's whole countries built around that. Estonia doesn't even really have bank cards anymore. Everything is based on the citizen is a mobile citizenship. So everything they do. So hopefully the larger countries will get on board with that.
Right. I think that's inevitable. I believe that anything you have in your pockets or your purse, they're going to find a way to put it on your iPhone, your smartphone, so that you don't need keys, you don't need credit cards, you don't need any of that stuff that you would carry. You don't need cash, certainly. It'll all be available on your smart device.
That's the best. I never have cash in London, and that is some way it's definitely more advanced than the US. As soon as I get off the plane, I needed cash to buy a pretzel. I was like, oh, where's a cash machine?
Right, exactly.
So you had said that, to echo what you said, that everything on for both sides, the consumers and the banks, is becoming easier and more automated. But what are the risk areas for banks? Do you think there's different areas where tech is going to present more significant challenges than they faced in the first few hundred years of banking?
When people talk about risks of high tech and bank or fintech and banks, I think they probably go a different direction than I would go. They talk about, oh, the transactional risks and the risks of fraud. I think the real risk to financial institutions is being left behind in favor of high tech alternatives for the transfer of money, being left behind in the provision of other services that they have traditionally provided. Consumers really got on board in the last 10 years. And that's where we've seen this rocket rise of expectations for technology in financial services. We know that successful fintech startups are the ones that are designed to challenge, threaten, and eventually make banking services obsolete. They're going to provide faster and better services to an underserved community. So there's already examples of this. Everyone knows the names PayPal, Venmo, Cash App, Google Pay. They know all those mechanisms are out there to directly pay people, and that's a cheap and efficient way to make transfers of funds. So bank customers are saying, I want to access everything with my phone. I want to make payments with my phone. I want to see my balances. I want to see my statements with my phone. I want to invest on my phone. I want to borrow money on my phone. They want to do everything with their phone. So fintech companies are saying, hey, how do we provide that to them? What are we going to do to provide that service to them? And I think that's the evolution of fintech. And I think that banks were resistant to that. And the risk that you asked about is that they have taken too long and are still dragging their feet about accepting the future of fintech.
That's true. Banks we associate as 9 to 3, Monday through Friday. And now they have to be 24/7 because their user base wants them to be online 24/7, accessible to do anything at any time. And that's pretty
That
great as a customer.
and there are banks that are figuring that out. I just last week saw a credit card that I wanted to apply for. I pulled out my phone and I not only applied for it, I got approved for it in that one sitting. And I'm waiting for the plastic to be delivered, but I already have it on my phone and can start using it immediately.
That's
So
AI making sure if you're a credible person to invest in and flagging you as reasonable investment to a reasonable lack of risk for a credit card.
that's right. So if you're a company that doesn't accept that as your responsibility in providing service, you're going to get left behind in favor of the companies that are doing that.
No, absolutely. So, John, your expertise is definitely in the field of financial fraud. Is there, obviously, there's a risk for them to be left behind if they don't get in the game, but is there an increased risk of fraud due to this immense influx of innovation in fintech?
Yes and no.
Ooh.
Yes, there's a risk because you're talking about making things easier, making things immediate, making things accessible right now. So absolutely, whenever you do those things, you increase risks. But because of the sophistication, you're actually increasing security as well. So companies have been using something called multi-factor authentication for some time. And I like to think of, multi-factor identification as being what you know, what you have, and who you are. So what you know would be a password. That's old school. What you have would be like a physical token. They make a USB port token you can plug into a device, and that provides a password, a physical password. And then who you are, that goes to biometric authentication. Who you are judging by your fingerprint, who you are judging by facial recognition or voice recognition.
Yeah,
So
the eye with the new Apple X, they do eye
exactly,
recognition.
exactly. So
But then no
those,
app is prepared for it. None of
but
the traditional banking are prepared for that yet. That's great.
those are better answers than passwords. Those are excellent answers. The problem with password authentication is, a well-known problem. They're increasingly complex passwords. They're hard to remember. They're supposed to be changed regularly. None of that, works very well in terms of satisfying consumers. So the answer is that there will be a better solution in the form of higher tech authentication, which will work as fraud prevention. I think by 2020, maybe 2022, hedge my bets a little bit, the PIN, the personal identification number, is going to go away. I think it'll vanish completely. Banks will
Because
replace it
we
with
all
biometric
use the
identification.
same one. We all use the same PIN for our phone, for our cards, everything.
Right. So it's going to be replaced by fingerprints and iris scans and facial recognition, palm vein patterns,
Ooh.
and voice recognition. Some interesting ideas out there that are coming online right now. And I think banks are going to be turning to those ideas as alternatives. I think that ATM machines, for example, will be upgraded, and you won't be putting a PIN in. You'll be identified by some biometric, and that will be your access to your ATM cash if you need it. Soft tokens are becoming common. There'll be more use of soft tokens as well.
So what's a soft token?
So if you have another device than the one you're using to connect with your financial institution, they'll text you or send you on that device a one-time code. And that code is the one you put into the other device. And that code might be hopefully coming across on a biometrically protected device. So not only does the soft token provide another means of identifying you, but you had to have the biometrics to open up the phone to get the soft token out.
Yeah, for two-factor authentication to work, you have to live in one country though, because I have a lot of problems because I have bank accounts in 3 countries. And I had previous phone numbers and it connected to a SIM, but the banks are still only allowing you to have a local phone number. So it's 9 digits in Spain and 11 digits in the UK and 10 in the US. So that's a problem. But as soon as phones probably in the next couple of years get rid of SIM cards, then it's totally going to be feasible for everyone. And I love it. For right now, it's super frustrating. And I have like random friends in other countries that I use for my authentication. And
Yeah,
it's not good, but definitely it will be awesome soon. And it should be biometric because that travels with me everywhere.
right. And you're in the guinea pig category. You're in the cutting edge of people that live across borders. And for most people who don't, most people who are entirely within one country, they are not encountering those problems. But everyone is going to be more likely to be like you in the future. And so there is going to be an answer, but you're sadly in that category where it hasn't come yet. There is not enough uniformity, but uniformity is coming. There will be a great deal of more uniformity in technology.
That's true, because when people want to come visit or something, they're like, okay, do I exchange money ahead? And I say, no, just withdraw it from the bank when you arrive is the cheapest way. But it's bizarre, as low tech as I am as a human being, that I am an edge case. And that's good. So hopefully banks will evolve because, again, different companies like Paybase or Monzo or TransferWise are ready to take up if these companies don't. So
Exactly.
yeah, how do you think banks are holding up versus other industries then in their preparedness to deal with these security issues? Are they worse off, banks, or are they safer?
No, I think banks are probably better positioned at a starting point to deal with security issues than most companies. Banks have been required for a long time to do customer identification. Um, Financial institutions are required to verify the identity of every individual and business that they're conducting business with. That's been the case under the U.S. Patriot Act for nearly 2
Does
decades.
that mean like
So
ID check or what?
it's broadly under a KYC program, Know Your Customer. They have to do enough of a background check to find out who they're doing business with. What's the expected relationship going to be? So banks routinely will open accounts having come to know who they're dealing with. They won't just blindly open accounts the way other companies might. Other companies would probably be glad to have a customer and open an account without asking any questions. You will always get questioned in the US and in the UK, by the way. Same rules apply. You have to be vetted before you can open an account. That's your access to the financial system, and they don't let you have that access without knowing who you are.
And that's definitely a tech upgrade too, because we've all seen in the 50s and 60s in TV where decision was made by a white dude in a suit in an office, and you having to meet in person. But now that verification of who you are is much more like your passport is biometric and digitized or anything like that. So that's another show of fintech evolving more quickly and identifying you as well. That's interesting.
Absolutely.
Yeah. So there's no doubt, like, if we're talking about banking or we're talking about tech in general, we have to touch on data privacy. And a data breach is certainly the best way to get bad press for banks. Certainly in the Europe and the US, we see it once a week. Maybe there's a data breach now. So how are banks leveraging fintech to help with that privacy?
Yes, you are right. There have been many spectacular privacy breaches.
Wow.
In recent years. It's been pretty awful. I will say I don't think there have been that many examples of banks being broadly compromised in data breaches. And I have a theory that that's because banks have always been in the business of keeping secrets. And it's arguable that banks have adapted faster than other industries to keeping secrets safe and in keeping data private in this digital age. That banks have much more been focused on privacy issues because that's their historic orientation. And you could maybe say that the resistance that banks showed to new technology has been helpful because they were moving slowly into new technology. It kept them from getting ahead of themselves and being victimized by not yet being ready for the next new breach of security. And fintech is going to add all kinds of tools. It's already added tools of encryption and secure data storage. I think that in banking, those innovations are already, they're being built on a strong foundation of existing data security. It's worth noting that many banks in the US are voluntarily complying with the EU GDPR. There are people who may not know, listening, that GDPR stands for General Data Protection Regulation. The GDPR standardizes data protection in EU countries. It involves strict rules on controlling the processing of personal identity information. In the US, we have a counterpart, kind of a poor cousin, if you will, called the Graham-Leach-Bliley Act, and that's been around since 1999.
And very memorable name, too.
Yeah, blah. The GLBA requires financial institutions to explain how they share and protect their customers' private information. That should sound familiar if you're living in a European country, because that's a big part of the GDPR. So there has always been this GLBA compliance by the financial services industry, at least for the last 20 years.
Well, that's good because that sets them up to automatically comply with GDPR, which they kind of do anyway. And for our listeners, if you want to learn more about GDPR, our previous episode had a wonderful interview that really got into, we've actually had 2 episodes about GDPR, a primer and now that it's in effect and popping up on our screens all the time. You can learn more about it in those episodes as well. So
they were good. I enjoyed those episodes, by the way.
Why, thank you. I'm glad. It's super annoying, but super important and necessary at the same time, which is how all privacy is and security seems to be. Necessarily annoying, so we slow down and be safe. So another acronym, another very European thing we all hear about here, which is PSD2. What does US banks have to do with the Revised Payment Services Directive?
So the Revised Payment Services Directive, PSD2, enables bank customers, both the consumers and the business customers, to use third-party providers to manage their finances. It's kind of mind-boggling for the US markets, I think, that in the near future, people in the EU are going to be able to use Facebook or Google to pay their bills. They're going to be able to make P2P transfers. They're going to be able to analyze spending while the money still sits safely in the bank. The banks are going to be obligated by PSD2 to provide third-party providers with access to customer accounts through open application program interfaces, or APIs. So third parties are going to be able to build financial services on top of the bank's data and infrastructure. And that means, this is the scary part, banks will be competing with everyone offering financial services. PSD2 will fundamentally change the payments value chain for consumers. So most practices in the US actually line up with the PSD2 requirements, with a few exceptions. Already every bank feels pressure to have some app, to have some mechanism to work with Apple Pay or PayPal. They already have some form of connectivity with those. And I think one way to think of it in the US is that those cash management platforms that we talked about earlier that provide access to customers, those in the future will likely be modified to provide API access and to enable a form of PSD2 compliance in the US. I'm sure the large US banks are working hard already to provide this to US customers preemptively.
Yeah, they definitely want to anyway, because they're going to legally have to have it, as it's going to be the norm for European banks to want an API, because it's the quickest way to connect to these other banks. And then otherwise they're going to be left behind again. And when you do integrations via APIs, it causes people to create certain workflows, so they're not going to be as likely to leave you because they're using this tool and this tool and your bank. So why would they want to change it? Because everything's about creating more convenience with technology, and while it has to be done safely, it has to be convenient. We can't really talk about fintech unless we talk about Bitcoin, Ethereum, cryptocurrencies, blockchain technologies. We hear so much about cryptocurrencies, but John, you said you're not that much sure that it will likely impact traditional banking.
I am a cynic about cryptocurrencies, and I'll tell you why. It's the view of the US government, and this is a near quote, that fintech poses myriad risks to financial institutions. And the answer for those risks, when government considers them, is to regulate. So as recently as October 18th of 2018, the United States Securities and Exchange Commission, the SEC, announced the launch of FinHub to assist in the monitoring and regulation of fintech startups, especially crypto startups. So the thinking is that SEC regulation could reduce oversaturation in the ICO, the initial coin offering market, and allow stronger crypto-based projects to emerge. Well, it is antithetical to the world of crypto to be closely regulated. So I think that is not a good sign for cryptocurrencies in the US. The reality is this: the management and the control of fiat currency, that's the currency of every country that they issue by government fiat, is a powerful vehicle, a powerful tool to the government in controlling activity that they want to control. And it's a powerful tool for achieving objectives. So anti-money laundering and anti-terrorism is actually regulated through currency transactions. The government will never allow cryptocurrencies to intrude in some serious way on dollar transactions that they can monitor and keep track of. They have to be able to trace their transactions, and I don't think they're going to allow unfettered development of cryptocurrencies for that reason.
We will also see if banks will accept it or not and how that works, but it remains to be seen. It does seem very new, cryptocurrency, so we will see if you are right in the upcoming years, John.
Well, I want to hedge my bet in this regard. I think there is a future for cryptocurrencies in one aspect. I think that US banks may come together with an alternative that has the convenience of cryptocurrencies, but without the negatives. I think the demand is there, the technology is there, And if a consortium of major banks decided to back a particular cryptocurrency that linked to the banking system, it allowed P2P transfers of digitally native assets. You know, when you transfer assets now, you're transferring a bookkeeping record from one account to another account. But the thing about cryptocurrencies is you actually transfer the value. That's the revolutionary difference.
Mm-hmm.
So if banks were to adopt a cryptocurrency and say, you know what, we'll go on board with this cryptocurrency transfer idea, I think that very well could catch on. It is the essence of PSD2 in EU countries. And I think the banks have a chance to preempt a US version of PSD2 by owning it as the future and getting there first, if you will. I think that may be the next big thing in fintech for traditional banking.
Is to embrace the innovation of others. When you can't build it yourself, allow others to securely build on it. That's a great idea.
Exactly.
Perfect. Well, thank you so much, John, for taking the time to explain fintech to our IR Digital listeners. And of course, thank you to everybody that's listening. The IR Digital podcasts are meant to be educational resources from experienced lawyers, accountants, and financial advisors who each have extensive knowledge on the topics you as professionals need to know more about. To learn more about IR Digital and its services, please visit irglobal.com. And if you found this episode useful, please consider sharing it and liking it on our SoundCloud page. And John, so if our listeners want to follow up directly with you about fintech legal issues, what is the best way for them to contact you?
Well, our firm website is Frigolaw, FRIGOLAW.com. So that's one easy way to FRIGOLAW.com.
Okay, great.
So that's one easy way to get to information about me and about our firm. And my direct email address is jfriedemann@frigolaw.com.
Great. Okay, and you'll be able to definitely see the spelling and everything in the notes of this episode as well. So thank you, everyone. Thank you, John, again. And let's make it a great 2019 where I hope we see a lot of your fintech predictions come to fruition.
Thank you, Jennifer.
Okay.